Well, good morning, everyone. It's March 19th. It's a Thursday. And as I always say, let's get into it. All right. Stocks were largely subdued this morning. Well, Thursday in the night session and in the European and in the Asian session after days of massive volatility as investor digested new financial support. That's right, including central banks' promise. That's right. Last night was amazing when they did this. The market rallied to funnel 750 billion euros, that's $817 billion into the financial markets. Now, the sentiment remains fragile. There's no question about that. Even prices for investments seen as safe long-term treasuries, as investors are looking into treasuries right now, they're cooling off. Why? Because investors are putting their money putting their money into cash or pulling their money from the market. Any way you want to put it, or any way you want to take it, the money is coming out of the equities market. There's no question about that. Now, late on Wednesday, the Federal Reserve said it'll establish an emergency lending facility to help to unclog a short-term credit market that has been disrupted by the viral outbreak. Now, around the same time, the European Central Bank, this was last night, launched a new expanded program to buy financial assets in a bid to calm markets. And I think this will be very helpful. The 750 billion euros in purchase are aimed at keeping borrowing costs down and making sure the bank's low rates go through the economy. And I think that's going to be very, very important. I think the central banks are starting to take signals from the Fed. The Fed were hoping they were going to do that. This is going to bring liquidity into the markets and flood the economy with money, which is very, very important when markets are trying to regenerate themselves and trying to go into another bull run. And folks, I want you to know, even though things seem bad right now, what the Fed is doing, what the central banks is doing, is going to ensure a very bullish market for many, many years to come, just as they did in 2008. This will be behind us. This coronavirus will be behind us in the next few months, and the markets will continue. But the impact of what the Fed and central banks are putting into the market will be felt for years to come. The quantitative easing that the Fed put into the market between 2008 and 2014 doubled the size of the global equity market. It went from 34 trillion to between 68 and 70 trillion in those 6 years. So I am gearing up for a really good bull run once all this drama, is behind us. We've had some Fed data come out. It wasn't very positive. Jobless claims came out just a little while ago. The numbers jumped. I can't speak this morning. The numbers jumped by 70,000, which is substantial, and it's starting to show an impact of the coronavirus. But this is not surprising. Also, the Brexit negotiator, Michel Barnier, you might have heard from him. He's been negotiating everything between Europe and UK. He's got the coronavirus. Not as big of a deal, but important because he's been very instrumental in this negotiation. So it's very, very important. Crude oil. I've been asked a lot about crude oil in recent days. I'm expecting crude oil prices to come a little higher, fill this gap right around the 34.40 level, and then come back down unless there's some major news. Right now, with the economy and the fact that the coronavirus may be the major headlines over the next few months, tells me that crude oil is not going to be making a comeback anytime soon. Now, it may be making a comeback, but again, I'm not expecting the long-term trend. And as you can see here, the long-term trend has been upon us since January. I'm not expecting it to reverse. I'm expecting it to come up, maybe meet us halfway. We went to as high as 64. We went to as low as 22, probably right into this area. Let's put the 200-day line, see how off I am. Oh, it's a little higher than I thought. It's actually at the 53 level. I thought it was more at the 50-45 level. I don't think we're going to get to the 200-day line, but I do believe we're going to fill this gap. The market's going to consolidate maybe for another few weeks after that, and then we're going to have another leg down. Whether this is the low or not, I'm not 100% sure, but we should know within the next few weeks. If things don't get worse, especially in the U.S. over the next few weeks, I think we're going to have some more negotiation wiggle room. If not, if things don't get better within the next 2-3 weeks or begin to show signs of recovery, then the markets may never, ever, ever well, I don't want to say never, may not come up all the way up here before they bounce back down. They may just stay around this level. But either way, I do believe if things stay the same way for the foreseeable future, we're going to have a bounce from the low 20s to the mid 30s or even the high 30s before we come back down once again. Looking at the S&P 500, this is the short-term bottom. It looks like the market's going to open a little lower today. There's a good chance, there's a really good chance we're near the bottom. We may hover around here, we may break this low, but the bottom line is I don't think we're going to see the kind of drop. The moving from 303 to 230, 240, I don't think that's going to happen anymore. I think the market's near its fair value. P ratios are now undervalued from being overvalued. The market has discounted about 30% over the last 4 weeks, and I honestly, in good faith, think the worst is behind us. Now, if you look at, let me show you something interesting. If you look at the relative strength index, you will see that it's having trouble. The price action's going lower right here, but it's having trouble moving down to this level, to the 12th level, which it did right over here. So if we can remain higher than this level over the next few weeks, what you're going to see is called negative divergence. Let me show you this here. See, momentum levels are rising while price is falling. You see that? Even further down, let me take this one step further. I want you to see this is very important. Actually, right here. See, price is moving down from this level right here, but momentum levels aren't going lower, they're going higher. Now, that's the opposite of what happened right here. Notice, let me show you. See, momentum levels went higher, but on the second high, when we went higher on the market, it's probably better for me to show you this on a small chart. Probably be easier. Okay, notice we're going higher here, we're going lower here. We're going lower here, we're going higher here. That's divergence, and that's telling us momentum levels can't sustain the price levels. They can't sustain the lows that we're in right now, just like they couldn't sustain these highs. We were going higher here, but we peaked out right over here. The market told us right around here, we're done. And even though we went higher right here, we were at 340, here we were around 332, momentum levels couldn't go higher. And right now, momentum levels can't go lower. And that's very, very important. And that's telling us, now this is not telling us that this is the absolute bottom, but it's telling us that that rubber band is getting really, really, really stretched out. So the odds of seeing sustained big down move, sustained selling pressure from this level on is not very realistic. Now, I could be wrong. There could be something completely on the horizon that we're not afraid, that we don't know about. I'm making this up. Mutation of the coronavirus, Fed policy not going through, chance of Trump getting reelected looking worse. The stock market really loves President Trump. And you should know that when we're in a bear market, we've never had a same president reelected. Americans do not like to vote for the guy who put us into a recession, regardless if it was his fault or not. Keep that in mind. It's never happened, but a lot of things that are happening that have never happened. But my job is to give you the statistics, to give you all of the information so you can make the best decision. And right now, if the market stays below the 200-day moving average right here instead of right here, the market's in a bear market. And if the market's in a bear market, then the chances of Trump getting reelected are lower. And if his chances of getting reelected are lower, that means Biden's chances are higher, and the market does not like Biden as much as it likes Trump. Folks, this is not political. Whether you're a Democrat, Republican, it makes no difference to me. I'm not biased. I'm just telling you what the markets like, what the markets don't like. The markets like President Trump, and the longer we stay here below the 200-day moving average, the less it looks like he will have a chance of re-election. Again, I could be totally off. I'm speculating. I'm only going by the past. We've never had the coronavirus. We've never had President Trump as a president. So a lot of things could change. And remember, the market can come back and bounce back. Now, we went as high as 340. We went as low as 220. There's a good chance we're going to bounce back to this level, to the 200-day moving average. Whether we go higher or not, that depends on the fundamentals, market sentiment, and most important, the coronavirus. Now, I want to give you the 3 strongest stocks right now in the NASDAQ, all right? First one, I got to give them to you because everybody's looking for the best, strongest stocks. This is the strongest stock right now. Regeneron Pharmaceuticals, REGN, ticker symbol. It's near all-time highs. I've been telling you this for 2 weeks now, and it's still going higher. Gilead Science, GILD ticker symbol. Stock is making all-time highs right now. Look at this. Oh, actually, no, excuse me, not all-time highs. It's making 90-day highs. 90-day highs. Relative strength is good, though. And the stock looks like it's making a comeback over time. If you look 3 years, it was higher at 89. But if you look over the last 2 years, this stock is breaking out. It looks like Guild and REGN may have the first coronavirus vaccine, or working on it, or related to it, because these stocks are completely ignoring the downtrend. And finally, the last stock, the third most strongest stocks, is Citrix Systems. This Citrix Systems is very interesting. We used to use this program. They host Web2 webinar. You know how we have our webinars? They are the tools that people use to have webinars and online meetings. So as long as this coronavirus is going to be impacting us, people are going to be using software like Zoom, GoToWebinars, GoToMeetings. Well, Citrix Systems makes GoToWebinars. That's what they do. GoToMeetings. If you want to have a meeting with 100 people around the globe right now, and you don't want to be in the same room, hello, coronavirus, this is what you want to trade right now. And again, we got Citrix Systems, we got Regeneron, and we got Gilead Science. Am I pronouncing it right? Is it Gilead or is it Gilead Science? I don't know. I don't know how to pronounce this. But I do know it's the strongest stock right now. It's breaking out to new highs, and the ticker symbol is GILD. And I think that's all you need to know to get in on it right now. Folks, these stocks are bucking the trend, and when the stock market reverses, there's going to be some massive upside. I'm not kidding you. The stock market's going to help these stocks go even farther. And you know what? There's a good, now I don't know this for a fact, but folks, I would bet insiders who have good info are buying these stocks because they're either at 52-week highs, making 52-week highs, or trading above 52-week highs. So I would not be surprised. I don't know this for a fact. I don't know this for sure, but I wouldn't be surprised if insiders are getting into it right now. Now, folks, I know we've seen troubling times and chaotic times. I mean, it's chaos right now. We're in the middle of a real pandemic. I mean, there's no question about it. And a bearish market, record volatility. Volatility on the SPY right now is 10 times its average daily range. And I totally get why the majority of traders are fearful right now. I mean, I get it. This is the time to be very, very cautious. But now is not the time. Folks, this is not the time to roll over or roll into a ball and hide. All right? Remember what I tell you, there's 2 kinds of dogs. One, you kick, it rolls over and dies. And the other one, you kick, it'll jump up and bite you in the butt. And that's who I'm hoping I'm speaking to right now. Now, it's turbulent, scary time, but times like this give us amazing opportunity. This is where our biggest opportunities appear. So I invite you to open up your mind and watch the #1 American insider, the #1 insider, Roger Stone. Yes, we share the first name, Roger here, Roger there, but we're different people. #1 insider, Roger Stone, and listen to what he has to say. Roger Stone wants to level the playing field. I mean, really wants to level the playing field and show you how the world's most powerful and influential families cash in on panic. All right? This is what the most richest and influential families are doing right now. This is how they cash in when others panic. This will give you an unfair advantage. Click the link below. Watch how you can copy the stock market moves of the global elite. I'm not kidding. I'm looking at the market right now. It's moving there's opportunity. Remember, folks, volatility gives you opportunity. You could trade this market from either direction. There's stocks right now making new highs. There are insiders buying like there's no tomorrow right now. This is not the time to run into your closet and hide. This is not the time to roll into a ball and pretend you're invisible. This is the time where fortunes are made. You got to strike when the iron is hot. Folks, follow the link below. Get in on this now. Get an unfair advantage. Roger Stone's been around for decades. This guy advises President Trump. If anyone knows how to get out of this, and if anyone knows what insiders are doing, it's Roger Stone. Follow the link below. Get in on it now. Don't delay. Don't procrastinate. Turn this losing period into the best period in your life. Talk soon. Take care, guys.